Alrighty, hey everybody, welcome to the show. Welcome to the show. And good morning, Sledge, Will, Rex, Don, Darren, Joy, Ivan, Arturo, Mark, David, Donald, Dan, Sergio, Cliff, Ted, Chris, Jason, Kathy, John. Glad to see everybody. Darren back in at his home place. Made it all the way back. I don't know if I wonder if Svenborn made it back yet. He may still be in progress. Hey, Rongamer, good to see you. And glad everybody's here. We got the algos kind of short the market. Potential for them to create some chaos. Before we talk about all that, though, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. So if you need financial advice, you need to hire and consult a financial advisor. I'm not telling you to trade stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them because there is a substantial risk of loss. Today is kind of a benign day in the market, but those algos are short. We have not a lot of information coming out today as far as the U.S. goes. Tomorrow, though, the big show, 2 p.m., set your alarm. As I said, the market likely to move. Now, we could get a retrace on this. If we keep ripping today, like we have been the last couple of days, I mean, Friday was a big reversal day. Tuesday, a little continuation, kind of. We'll look at that here in a minute on the charts. If we continue today to get some upside, it is possible this results in a dip. It just makes too much sense, all right? Even though we all know that they're not going to raise the rates, they're not going to cut the rates, they're not going to do anything with the rates probably. Just going to sit on it. It'll be down to, it'll be blamed on whatever Powell says here. Oh, he's more hawkish. Oh, he's more dovish. Oh, they use hawkish for going up and going down. They use dovish for going up, going down. I mean, come on. And this is a guava monster here. It's kind of a teal color. Pretty good. Svenborn gave me a refill. That's not the refill can, but he did give me a guava refill. And for those of you that didn't see it, let me do this real quick. For those of you who didn't see this thing, check this out. It'll have some clear because it's got green logos. Svenborn gave me an emergency break glass in case of emergency. Actually, it says do not break glass. It slides open in case I wake up late, forget to grab a monster, get to the office. And he was saying it would be a travesty if I didn't have the morning monster and come at you all with a full facilities about me to be able to produce the show. So anyway, thought it was a little funny. So that was a cool little gift he gave me when he was here for the VIP event last week. And hey, Kay, good to see you. Good to see everybody. So that's kind of what we got cooking this week. Those algos. Back to the algos, right? I came for the algos. Well, here you go. Right here. Short position. Check this out. Maybe I should copy it and put it on the other. And grab this so I can draw on it. Let's put it over here. Grab a new tab. Throw it in here. There we go. We can draw on it. And check this out right down here. That's a minus 30. That's billions of dollars right there. Right down here, billions of dollars. We've got a minus 30. And look what happens when we get down in here. I mean, could we go on down? Possible. But this is the point from which we make strong reversals in the market typically. We could go back and look at some of these dates. That's going to be COVID right there. Now this is, when you read this, it's not commodity trading advisors, it's computerized trading algorithms right there. This is by Goldman Sachs. They did more analysis on how short the algorithms might actually be in the market. And it's pretty big. And this is U.S. equities too. So we could kick off a short squeeze that pops it right up to the top. You know, zeros right here. You see this over here. It was like they got negative, they had to come back positive. They got negative, they had to come back positive. They got negative, they had to come back positive. We got chop in the market. We got negative again. It ripped again. We got negative again. And big pop right there. You may know what that was. That's the bottom. That was the bottom of the market right there. That was where the market bottomed out. Now this started about mid 2022 into the bottom in 2023. This is, you know, why did we see those big swings in the market in 2022? Right there is the algo's driving it, or one of the drivers of those big swings. Then we saw this big dip right there. Ouch. But then they ripped back up higher, took us back to highs. That right there. I think that was late 23. Let's go check the chart really quickly. I want to see what that lines up with. Boom, 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 boom. Zoom this out. Take a look. All my alerts. Late 23. Oh, yep, there it is. Right there. That thing. That correction right there is what corresponds to that one right there. So this pretty much directly correlates with the market. You know, it may not be the cause, but they ride along. And when we're down at reversal levels here, down at reversal levels, the end of the chart right there. So it does have a little bit of space between the current and the end of the chart. April 17th. This start 2013. It's been a few years. So what do we glean from this? Stay frosty, my friends. We might catch a big reversal in the market. Those algorithms have not come up off the lows yet. All right, even though it seems like a nice little bounce and lots of, shoot, man. Even some people, popular people I follow, were doing like polls and stuff. Who expects the S&P to take another trip down? It was like 90% people voting. I was like, people gonna get ripped. Everybody's bearish. Fear and greed index. Let's see if we can load this back up. Hopefully it doesn't show all my personal information. Still hanging out in fear. Even coming up off the lows like we have so far. Everybody's scared. Still. I mean, maybe for good reason, but you know. How we make money today, right? How do we make money today? That's always the big question. JT, how do I make money? Inquiring minds want to know. And here we go. So we touched that resistance zone. You remember what that was? 1 hour. Or actually, 30 minute. 30 minute on S&P. It was probably the 1 hour on the ES right there. Touched it, turned down. If we can hold in here, turn back up through, come up to the next zone. This is the way it works. We just ping pong up. There's the 1 hour right up there. They do come down, you know, we are in a downtrend, so they're coming down. 4 hour right up here. Right at the 618 retrace of the whole drop from the February 19th high to the March 13th low. 618 hanging out right there with the 4 hour. The daily right below it. So we'll have to get through the daily before we get through the 618. So I was talking with another guru, Chris Pulver, yesterday while we were doing a sale type thing. He was like, I see significant resistance from 5,700 to 5,800. Well, I mean, there's the 30-minute roadmap line. Here's the daily roadmap line. Here's the 4-hour roadmap line. I mean, it's kind of, and then the, or the hourly and then the 4-hour. I mean, it's all stacked in here, right? And I was like, well, it probably goes on up to 5,900, up here. If we can get through this, 200 points of stacked against us, downward pressure EMAs right here. We probably go sailing right on up. So this will be the key test zone in the next 200 points or so. Get up through it. Looks positive. Now, this one, look how fast that came up off the lows. Holy moly. I am kind of hoping we don't see this just shoot right to 80 immediately, because then we might set up another dip. I mean, look how fast we did it back here in January. It was like 1 day, 2 day, 3 day, 4 day, 5 days, 6 days we were up there. So a week and a day. Wow. This may double dip, make a higher low. We did that over here. It's quite possible. So be careful. The FOMC tomorrow. If we're seeing another one of these today, we may get this tomorrow on the FOMC before we can take it on up. Probably going to the top. That doesn't negate making a lower low first. This could just be the first move and then we make a deeper dip before we take off. That's entirely possible. Entirely possible. So, like we did over here. Right here, we made a dip down in here. Popped up. And if you haven't seen this before, this is the percentage, basically, of stocks above their 20-day moving average in the S&P 500. We don't go below 0. We don't go above 100. I mean, think about it. You can't have below 0% and you can't have above 100%. So this is a giant market oscillator. How do you trade it? Well, you'd have to go trade individual stocks because this is an index. You can't just buy this ticker. All right. And S5FI, stocks above their 50-day. We're making the higher low right here. Potentially this indicating that we did come out the bottom right at the beginning of the year. It was kind of bearish coming to the beginning of the year. Bounced off of this line, uptrend of lows. And we're not going to continue it down because we can't go below 0. Highly likely we're going to get up here to the top. I mean, it's a giant market oscillator. We were up here at the top last time and over a year ago now. Made it to the bottom. Took us a year to get there. What are we likely to do next? Go visit the top again. S5TH, stocks above their 200-day moving average. We're getting slower and slower. Bigger picture here. This thing has been in an uptrend for a while. We did poke out the top up here. We don't typically hang out very long above 80 or below 20 on any of these 3 charts right here. But we do tend to push this one to extremes before we roll all the way down to extremes. So we haven't pushed out to an extreme level on the top since we've been to the bottom. The last time we were at the bottom, the lows in 22. Circling back to the algorithms. Now, the algorithms are pretty negative here right now, but that doesn't negate them ripping back to the upside. Making a higher high than we had right over here. That high, beginning of last year. So we haven't actually been pushing, the participation rate has been drifting off for a year in the market. Kind of wild when you think about it. Kind of wild. We've been pushing all-time highs, but the participation rate has been getting narrower and narrower and narrower along the way. As far as S&P 500 stocks, the percentage of them above their 200-day moving average. We did just dip down to 30. Be a great place to reverse and go take it back up to 90. And this could last a while. Like, this doesn't have to be fast at all. This could be out here in July, August, September, October maybe. But then take a big down for another couple years. So it doesn't tend to go very fast. Sometimes we get a fast move, but historically this tends to go kind of slow. We go from the bottom up to the top, takes a couple years, and we go back to the bottom, takes a couple years, back to the top, takes a year or two. That was a fast one. That was a faster one on that recovery, but then this from 21 down to late 22, kind of slower. And then this one from late 22 up to 24 took a couple years. So this one's a much slower chart than this one that we get up and down in a couple days. You can see the speed with which stocks above the 20-day rips to the top and bottom over and over and over. You do it in a line chart, you can see it's just like a kid scribbling or an EKG or whatever you want to call it. So I'm kind of biased a little bit bullish based on these three charts. Biased a little bit bullish. Yes, jumping in, checking it out, looking at the overnight action. Gotta switch to overnight action here. Looks like we got a little bit of a gap up on that contract rollover. That was a contract rollover. We are on a new contract. Switching out to June. Right there. What that says. If you didn't know how futures contracts work, we went from ESH 2025 to ESM 2025. So if you wanted to see ESH 2025 and see the fact that we didn't gap up on the restart, but this contract expires this week. It is done finito. Finito benito this week. So we switched to ESM 2025 as the current contract. Right here, this did cause a gap. Now, even on contract rollovers, we typically will take that gap back. At some point over here, this will probably take this gap back. How long that works, like I said, some point we'll take it back. It may be fast, it may be slow, it could be today, it could be tomorrow, could be on the FOMC. Looks like we're already gunning for it. May take it back before we can ramp on up. 4-hour resistance right up there around 58. These numbers are different than the cash index. Be careful. We may backtest the 1-hour roadmap line. As I said yesterday, we broke through it. As I said earlier, we broke through it on the futures. We did not come up to it on the cash index. We didn't get there on the cash index, but we got there, came up through it. Now we may backtest it before we can go on up to the next level. Next level, 4-hour. Right up in here. Draw, please. Right up in there. And then the daily. Hanging out just below it looks like. Load, please. 1, 2, 3. There he goes. Right there, yeah. So the 4-hour and the daily almost right in the same spot. Almost right in the same spot. Right there. Right in that spot. If we get through it, 618 just above us on right around 5,900 on the futures. Sets us up to go rallying on off to higher levels. Potentially as high as 6,600. Everything's looking pretty good if we can break through major resistance above us. That's what we got on the S&P 500 futures chart. Why look at the futures? Because they provide more complete information. They've been trading all night, whereas the cash index just opened up with a gap and has missing information. When we look at that 15-minute, we closed yesterday and we just opened and it creates a gap. There's not overnight action. Like, we can't see it. Some of you may be like, well, why don't you just use SPY or something like that? It's not as liquid. Futures are pretty liquid. All right, there's more traders participating in this one and gives us better data. Now, the contract rollover does create an anomaly, but we're highly likely to fill that before we go on. In Q, that's the NASDAQ futures. Highly likely to fill it. Back test the 15 minutes. Maybe back test the 30. Maybe back test the 1 hour. It could back test them all. The 4 hour still above us. Up here. The daily still above us. Right up here. 20,000. Looks like that'll be the next major resistance point. And we have the 618 just above that. Break through all that stuff. That's the 618% level. Right around 21,000. If we can break through that, take us on up. Probably 23,000, maybe 24, possibly even 25,000 on NASDAQ. And you may be like, well, how the devil do you get to QQQ? You go NQ1 exclamation point divided by 41, and you basically get the QQQ price right there. So we're looking at 500 roughly and 540. It's all pretty, pretty much the same here. Go from that high down to this low. There's the resistance right around that 514. We could be looking at 560, 570, possibly 600. We go, okay. So you go to QQQ, and look, that's kind of the levels. Got the potential bounce. You got the 5. It's not perfect, but it's pretty close. 510 right there at the 618 level. We got around 496 roughly at the roadmap line. We've got 550 as an upside target, possibly 560. If we get really sparky, there's that 600 level right up in there. Not too shabby. Probably heading that way. Russell, big resistance, still in the same spot, right up here at the 61.8% retrace level of this drop that we had from back in November down to low here in March. It's been a wild ride. We'll see what happens. If we hold this resistance zone right around 2,300 on Russell, probably going to be heading lower, and that may test that zone while the S&P 500 and the NASDAQ make higher highs. So S&P 500, NASDAQ make higher highs, Russell makes a lower high, and sets up a bigger flush for all three indexes. It's kind of how I see it working out. If you got questions, let me know in the chat. We do have 30 minutes of awesome coming up at 5 p.m. this evening. If you want to make requests, that's the show to do. I give priority to channel members. So if you want priority, you want your ticker reviewed in a priority manner, make sure you're a channel member this evening. Come and hang out. We'll start about 5 p.m. Eastern and go for, I call it 30 minutes of awesome, but usually it's like an hour and a half of awesome. It is my dad's birthday today, so I'll have to, be, aware of the time because I'm supposed to go take him to Taco Tuesday tonight. And here's what we got. Oil back testing the uptrend of lows. Potentially going down. Right in here. GC. That's the making an extension. Wow. Beautiful. Beautiful extension. Now we're getting to the point where the 618 and the roadmap line are lining up here, so I'd be very cautious on extensions. Doesn't have to retrace, but it's probably going to at some point. We're coming up to the prior high on silver. This is a danger zone. I'm not shorting it, but I will load up if we do this retrace right here. I'm still waiting on a retrace. This is a new potential trend, breakouts. We need a pullback and a continuation. This one right here wasn't the best example of this right here. Wasn't the best. I like the best of the best stuff before I put my money at risk. At least I try to find it. Bitcoin here, still finding major resistance at the daily roadmap line on the futures. If you go look at the information on social media, you might see that there's a big battle going on. There is a large whale that took a position. It's debatable how big it is, somewhere between 300 and 400 million. Maybe it started at 300 million and they've added up to 400 million using 40x leverage. They're short Bitcoin, looking for prices, and their price target, they actually have the orders on right down in here. Now, I say it's a big thing on social media because they're trying to get this guy liquidated. There's like, commit to buying Bitcoin, push it higher. They're trying to push this guy above 88,000 to liquidate him. Think about that. Going short Bitcoin with 300 million and then adding, as it got pushed up here, he added up to about $400 million worth of Bitcoin with 40x leverage. And the orders are out there. You can look at the orders on some of the exchanges. People are posting it. Right, let's liquidate this guy. Let's get commitments from all the Bitcoin whales, crypto whales. But the participation is just not happening so far. We're not pushing it up. I'd love to see it break on up, get above the 618, push it on up. The numbers are there, but we're not moving so far. We're just sitting right at the roadmap line. So I always say, if you're buying aggressive, I like to wait until there's a close above the roadmap line right there. And looking at the spot market on Bitcoin, we're not even to the roadmap line. We're just kind of doing a little consolidation thing underneath. Not super strong. It just doesn't get me super convinced and super excited about the reversal yet. We go from that low right there up to that high, probably coming down for a 618 retrace right at 79, right at 80,000 basically. If we can tap that, turn back higher, break through the roadmap line, come up, back test it, we set up the actual setup for going higher. That's what I'm looking for right there. That's right there. If you're like, well, I don't like crypto, I don't play crypto, you don't have to mess with this, all right? You don't have to play crypto. No FOMO. Don't have fear of missing out. Talking to new people, talking to people that never played crypto, don't want to play crypto, haven't had an interest in playing crypto. This may or may not be a great opportunity if it sets up. Doesn't even have to set up. Could just break down through these lows over here, break down through this support zone that we've got cooking here, and go lower. That's entirely possible. I don't really want to see it break below this high right back here from March of 24 before the halving. If we push down below that, that's cool. Let's put that on the other screen. Upgrade your software. If we start getting below this high right back here, I'm talking more than just a spike down or reverse. We get some sort of daily close and we get a couple closes in here, the likelihood we're going on down, highly likely. Something to keep in mind. If you're big into crypto right now, you're highly long, got to know where your exit point is. Getting down below that level is probably going to be my exit point. Probably. Now, off that high, if this is it, we're in the crypto winter, 80% retrace is going to take us all the way back down here. Look at this. Ouch. Talking about levels back in the 20,000s. Possibly even all the way down to 22,000. Now, when we cross 25,000, way back over here in October 23, we blasted through that $25,000 level right here. I said that was likely the last time we ever see 25,000 again. I still feel that way. I don't think we're ever coming back to that 25,000 area. Maybe right. I guess it was right there. Right there. I think that was the last time we see 25,000. I might be wrong. Been wrong before. We'll see. That's what to watch for on the downside and the upside. I'd love to just take this higher, but if we don't, that's what we're looking at right there. That's what we're looking at. Ethereum, on the other hand, still being soft. We get down below the 16,000 area. We have one last hope and it becomes hope at that point. At 15,000 or 1,500, get below 1,500, probably going down to triple digits, which is at least 9.99, and maybe extend it on down even lower. NKD, finding a little resistance, getting back into the box. That's expected. In the coming days, I would love to see this rip right back up to the top, break out, and go higher. That's an indication of global liquidity. Global liquidity climbing is probably indicative that we'll ride higher in all the all the markets. U.S. market, crypto market. Now, dollar is being interesting here. Saw an article yesterday. It was like, the dollar exhibiting extreme weakness. This surprises everyone. I was like, not if you're a JT follower. I mean, how long have we been talking about the dollar's probably going lower? For years, literally. I mean, look at all the down arrows. This was a lower high. We're probably pushing this down into the 90s. More than likely. It's probably going right down in here. Maybe bounce, maybe get some extension. This could last late into this year, maybe even into next year, possibly past that. And if we get below that, we may be heading on down here. I've talked about this for a long time. Zoom out. Look at the dollar chart. This chart doesn't go anywhere. Certainly doesn't go anywhere fast. Probably coming back down before we can make another move up. So, hey, Kimberly, my favorite subscriber, showing up. So, keep it in mind. Like, keep following JT. I've been steering you correct so far on the dollar. Let's see where we can go. I still believe we're going on down. Probably making a low, lower than any of these lows we've had in the last 2 years. That's where we're heading. Now, that doesn't negate that we bounce for a couple months before we roll on down. So be careful. Stay frosty out there. This is not the right morning list, I'm pretty sure. Let's reload the list. I guess it was. All right, so things that were popping. Docu. Let's see. Hold on. Yeah, that's the right list. So Docu was popping. These, I'll go pull everything moving $2 or more up in the pre-market. Put it on the gainers list. Everything moving down $2 or more. Put it on the decliners list. These were popping pre-market, but gave it up quickly. Docu slammed back down. eBay just churning in here. Has the potential to go on up to 73. LUMN churning. Roblox churning. TBT. Not a good sign when all the top movers are back to flat after the open. TCOM. I think this was the first one on the list, though. I'm not sure what happened here, but ESLT. Nice pop. Nice pop. That's the one I remember. I don't remember. I'm not sure where these came from. It's kind of weird because the other list doesn't have those on there. So, I don't know. TradingView got a wild hair of its own. So that one, nice pop. How high do we go? Zoom out, look. At this point, be careful. Like, this is a crazy extension here. We may ramp it on up to 460, possibly 690 before we get a major pullback, but this is starting to look bubble pattern. What happens when the bubble pattern ends? We usually get a little chop, and then we correct it back down. If you've not seen the bubble pattern, you have no idea what I'm even talking about. Check this out right here. It goes into this giant rip higher. We get people thrilled, telling everybody to buy more. You get people talking about this that don't have any business talking about the stocks. And we're talking about like your Uber driver, your flight attendant, your gutter installer, your window installer, people that come do maintenance for you, whatever. You get those people that shouldn't really be talking. You don't expect them to be talking about stock market, giving you tips. You see people like, oh man, I got to tell everybody to buy more. This is like so good. And then you get euphoria. Like, I'm a genius. We're all like, we just got to dump more money into this. Be careful. We get complacent. That first dip happens. We get that chop. Then we break down. People get anxiety. They get denial. We'll just come back. We get panic. Oh, sugar honey iced tea. I got a GTFO. If you're not sure all my acronyms, you can go Google them. Sugar honey iced tea. I'm getting stopped out. I got to get out. You get angry. Why did the government let this stock drop? And you see a lot of this right now in the, like, why is the government not? Where's the Trump put? Where's Powell's put? See, you're already, like, people are already getting angry, and we haven't even really dropped much at all in the market. I mean, you pay attention to many people talking about the stock market online. People getting a little upset about this. Then, this is for the bubble pattern. We start flattening out. You get depressed, then you get disbelief, and disbelief takes us back to the cycle again. And you can start this thing all over again. And we see this happen on charts like this right here. This chart, GME. This one does it over and over. You see these bubbles. Retract bubble, like littler and littler. Like the big one right back there. And this has a split in it. It's a regular stock split, so it reduced the numbers. But if we actually multiplied this, GME times 4, these are the prices we saw when it did that giant rip. We saw like 500, drifted back off to 50. That's a 90% pullback. Holy bananas. And we popped again. Now we're drifting back off. And this may eventually, this could just be a long go of it before it takes it back down the whole way down. So be careful chasing stuff like this. Be careful. It's your money. You can do whatever you want to, but be careful. Bioscience, not for me. I don't trade pharma, biotech pharma. Just look, lots of pops, basically little bubbles. TSDD, Tesla short, ramping up. As I mentioned a few days ago, this could be indicating that we have a little more downside to go on Tesla. Could be. I don't know. It's trying to read the tea leaves out of a leveraged instrument. Leverage doesn't always follow the patterns. Be careful. Chasing stuff like this doesn't always work. Duolingo, hanging out at the roadmap line. If it can bust through, we can go on another potential run higher. That high, that low. The gap down is the resistance. Big gap. Get through the gap. 475, 507 are the targets. H row. Resistance at the roadmap line, 32. If this would be a higher time frame bounce, 3-day. So we could be looking at something like this. Potential 68 to 75. TSLQ. I mean, just shy of hitting that right there. Yeah. Typed the wrong order. This is traders. I can't remember the long for trader. Anyway, maybe this did a split and changed all the numbers. So dumpster fire here. Be careful. This may come on down. While we're getting a little pop right now, this can easily find resistance right here. Make new lows. Be careful. GDXU. Looking spicy. 3x leverage on gold miners. 70, 77 upside targets right in here. And gold may run until we hit that, and then we get a pullback. The roadmap line would be the logical place. This is leverage, though, yet again. Be careful on leverage. It may not work. GDX. Pushing it on out. Got that little fake out right there. Pushing on higher. We might go on up to 47, possibly even 51. GLD. Next level up, 287 potentially, if we're going to keep pushing. NVO. Had some green, now we're turning a little red. I still expect this to come on down, further downside. Ugly, pushing on out. It's at the target level. Be careful. That was like at 121 was where I expected it. It's possible going up to 126, 127. Be careful. And we're getting close to the end there. Ultra short Ethereum. This could reverse. Be careful. And this is one of the positive things going for Ethereum is the fact that this looks like we're about ready to do that. And if ultra short, leverage short drops, that means Ethereum would go up. So ETH potential to go up based on the leveraged short chart. But if this breaks out of this, we could go on down. So it's not a guarantee. There's no given here. Boyle hovering right over top of the roadmap line. NG1 exclamation point is the natural gas futures. This looks highly likely to drop back to the roadmap line somewhere around this 315 area, 320 area. If we don't hold that, we could extend this on down in the 250 area. Could get spicy on natural gas pulling back. This is seasonal, seasonality wise. If you look in here, usually around March, April, we get a giant pullback in the prices, and that is priced into the futures for the next 10 years. That we get a seasonal yearly pullback in March and April. I mean, it's already priced into the futures for years ahead. It's just a normal cycle. So seeing this kind of big pullback into March, April, May, late March, late March at this point. We're in the last third of March here. Last half, last third. It's possible we get that pullback. JNUG potentially going to hit that 64, 67, even 78 level up there. Nuggets. So lots of gold stuff on the poppers list today. Potential 65, 69 up there. SPRT, decliners. Oh, why don't I play pharmaceutical? Because it's stuff like this. Just rock it along, and then boom, right down on the downside. They can go both. They go either way. So that was the target. Potential to reverse here, but nothing's guaranteed. Be careful. MSTR getting whacked. On Bitcoin not participating. What the heck did I click on? I don't even know what I clicked on. Now, a big whack in MSTR is not a huge move on the chart because it's a big mover. Moves like leveraged Bitcoin. Bitcoin giving it up a little bit. This one not breaking above the highs. Downtrend highs. Now, I caution here. If we go look at the last cycle. Jump back over here. Does it look familiar? Does it look familiar? Anybody? Anybody in the chat? Anybody on the stream? Does it look familiar? Dun 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 dun. Gotta watch out. If it starts chopping. Break down. Yep. And another thing to note, this made its high in February, whereas Bitcoin made its high in November. This made a lower high in November. So is this the highest high this cycle? We screw around for, I don't know, 6 to 8 months. Bitcoin makes a new high. This makes a lower high. Yet again. Somewhere out in the late summer, October possibly. That was 272 days later. Let's see where that lines up. 272 days, be roughly August. Possibly, August, September. It's getting to be a weird coincidence. That's right around the time I expected the stock market to top out and possibly Bitcoin to top out. This makes a lower high at that point. Time to set the sails for a correction. Right there. Tesla can't get out of its own way yet. Support zone right down here. We're still at a higher low so far. Is this the initial bounce up that we just did? Or was this a bounce up and we get one more lower low? Test into that support before we can set up the reversal. Go test the roadmap line to get higher. Or break on down and make a new low. This is a cautionary zone right here between 180 and about 215, 220. The prior low from last week, I guess, or 2 weeks. Going to be almost a week and a half ago. We start getting below that low. Things not looking good for the home team. I've seen a ton of people posting about buying Teslas. Now, that doesn't mean that it's all fixed and good and they're moving tons of cars, because interest rates suck and nobody's buying cars across just about any brand. So that industry where you got to borrow money to buy something, houses, cars, boats, RVs, luxury stuff, even quads. It's a tough industry right now. People are tapped out. It's an app back tested well under the breakout level. Let's see this come back up through to go higher on app. Get a little pullback today. Probably going to double test the roadmap line. FNGA, which is formerly FNGU, not showing much sign of continuation into the roadmap line at 495, 500 area. If we can get up through that 538 area, be looking for 764 on the target up there for FNGA. PTIR. Do we extend this on down with PLTR dropping? Or did we make the low right there? We can break on higher and go push this on up to new highs. Looking at the PLTR chart for some guidance, we have support down at the 63 to 67 level, down there at the roadmap line. And if we were to go visit that, that's going to push PTIR on down. PTIR is the leveraged 2x leverage for PLTR right now. It's about a 21% downside for PLTR, which when you 2x leverage that's about a 42% downside for PTIR. 42% coming off of 128. That could be a pretty big pullback right there. We're talking about 42% down, roughly down in the 80 area. Downside for PTIR. BKKT. And that looks like we're going to break down and go lower at this point. That was a 3-wave up into that high back there in November when DJT was just talking about potentially a buyout. At this point, this looks like an upside down roadmap bounce. Continuation lower would be down in that $3 to $4 area, right down in here. Probably what's going to happen. CRWD. Potentially set up a bounce. Got resistance at the 396 area. Looking for 490 on the upside if we can break through that. AVGO. It's been sitting on the roadmap line. We have resistance at the 220 area at that 61.8% retrace from the drop that we started in December and made the lowest low there in early March. If we can get up through that 61.8% retrace, set up for 262 potential target on the upside. Coinbase, we are at the line in the sand. If we get below the 78.6% retrace of this move we did from the low in September to the high right up here in December, if we get below that level, roughly breaking down below 172 on Coinbase, looks like we could push this on down into the 130, possibly even 120 area down here. Now, if we can save this zone, build the reversal, we'll have resistance at the roadmap line around 237, possibly the 618 up here at 271. We get through all that, and the prior highs there at 300, where we consolidated for like a month, maybe two. We get through that, 387 on the upside in the near. And if we get the bigger move take hold, 530, 540, 560 possibly. ARQQ, interesting, has the reverse split, which makes this a dumpster fire right there. Meets the qualifications of a dumpster fire. If you're new here, you've not seen this before, giant downtrend, hanging out below the roadmap line almost the entire way. Then we get a reverse split. It basically sets this stock up to get a rally and then come back down to new lows and a dumpster fire fashion. Be careful. They lose tons of money. This is not the environment to lose tons of money. Maybe, possibly, they're going to go higher from here. It's a big sketchy thing. We made the high right there in December. We made this low right here in early March. We're coming up into the resistance zone at the $28 area. If we break through that, we do have that gap down at the $37 area. Could potentially set us up for an extension up to 65, but that still does not negate the fact that it may eventually go back down to the lows, back down around $3. And that was at $3 after that reverse split. And it's now at $23. I mean, holy cow, this is crazy. Reddit's holding the roadmap line, pushing back into the lows. This may come on down to test the breakout down here around 75, 76 level. And if we get below that, we may go lower low back down around the $30 area for Reddit, RDDT. ETR, looks like this one may take a visit to the roadmap line. PANW, hanging out at the roadmap line. If we can get the pop, break through the 61.8% resistance at the 194 area, we could be setting up a move to 215 on the upside, 215. ZS is just hanging right on this daily roadmap line. If we break down below these lows we've had around 180, we could take a trip down to the 130 area pretty quickly on ZS. That's Zscaler. QMCO hanging here on the roadmap line. Quantum computing coming back again. We're going to make another rally. I don't know. Could come back into the news once again. Breaking through these highs at 40. Through that consolidation at that 618% retrace level of the drop from December down to March. If we can break through that, get above the 40, we could push it on up to 125 on the next irrational rally higher. ARCB, this is Bitcoin hanging out under the roadmap line. Big red caution flag. Amazon hanging out below the roadmap line, pushing to new lows. This, if we push on down, we set up, basically get below 180 area, $180. Probably going to push this on down significantly, maybe down to the 140, 150 area on Amazon stock right there. AMZN, IONX. Not enough candles to do anything. That's the leveraged for IONQ. Carvana hanging out under the roadmap line. I did liquidate my short. This looked likely to bounce. Resistance at the $240 area. If we hold that and turn back lower again, a significant retrace, maybe down into the $60, $70 area, could take hold on Carvana. BitX, leverage Bitcoin, taking a whack today with Bitcoin's pullback. And if we can hold above the 61.8% retrace level here around 31, we set up the move explosion higher potentially to 84. We're going to have to break through upside resistance at 45 and at 54 before we can get up there. Very nice so far, but just not moving. And if we start breaking down, get below 25, this is probably game over, and we're probably going down, 15, 13, maybe even down to 10 or even single digits on BitX. Now, chart for the day. Dun, 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 dun. I actually brought one today. Right here. MU. Check this baby out. I like this number right here. 91% of the time this is set up, we've gone higher on 35 trades since 1984. This is pretty strong. Profit factor, I mean, I'd love to see it at 22, but it's at 2.2. The entry was on the close yesterday. Probably getting a pullback today. Closed at 103.11. We have the target at 114.28. That is an upside of $11.17. Stop below 84.76. Right there. We can look at the charts on the live charts. And yeah, just a slight pullback right there. Now it is kind of a downtrend of downtrend of highs, excuse me. Downtrend of highs. Really want to see that. Now that 114 target is just right there, right in the resistance zone. It doesn't have to break out to new highs to get there. If you wanted a leverage way to play without having to buy options, MUU is a way you could do this with shares. This does have a downtrend of highs. Caution, caution, caution. This is leverage. Leverage may not work out. All right. Options may not work out. How long would I expect this to play? Let's go read the numbers. On average, 40 trading days. So this might last 2 times the average, 3 times the average, 4 times the average. Hard to say. But when we look at 40 trading days, that is roughly 2 months. So if you bought 4 or 6 months of time, you'd probably be on the safer side of this. You might be $11 move on a 6-month option. That's not my bag. That's why MUU was one I talked about as a potential. You can get some 2x leverage without having to take into consideration how much time that this might take right there. If you take it, if you make some money, let me know. Let me know if you appreciate the bonus trade. My bias for the day right now, expecting that gap fill, and it looks like we may have already done it. Check it out. Yep, we did it. Got the gap fill. So now we're back testing the roadmap line on the 15 minutes. Well below the 5 minutes. Almost to the 30 minutes. That looks like the one we're going to gun for right there. May back test that one. Watch for that one to hold. If we hold it, turn back higher, get back up through the 618 of the high we made overnight to the low whenever we touch it. 618 level, probably be right around 5,700. If we get above that, we'll be set up to go on up and test higher roadmap lines right there. That's how it works. That's what I'm expecting. So right now, a little bit of downside potential early here. Kind of expecting that. We may grind a little bit today, pop back up, get to that 5,700 level. How'd I know where that was without drawing it? I've done this enough times. I knew about where the 61.8% retrace was going to be. Get up through there, 5,750, possibly 5,760 would be the targets before we do another pullback. There you go. Have a great day. Remember, 5 p.m., come hang out with me, make requests. If you don't show up and make requests, I don't have any show. It's a request show. That's all I got planned. So come hang out, get her done. Remember, channel members have priority. So be a channel member if you want priority on your ticket request this evening. Have a great day. Stay safe out there. We'll be back again later.